Good morning, guys. My name is Sean Dex, and I welcome you back to the Mango Grow for your daily Bitcoin and market analysis. My oh my, what a weekend it was. Bitcoin with a strong leg to the upside leading into the weekly close. And man, that weekly close was so important as well. We did have the signs all weekend, right? So we will be talking about that today. But there's so much to talk about. We have the FOMC meeting coming up in 2 days and 13 hours, and a massive monthly close on Bitcoin coming up in almost 2 days as well. So guys, I'm going to be honest with you. I'm struggling to talk about everything that we really need to talk about. There's so many things going on with Bitcoin at the moment, and there's just not enough time in these videos to discuss all of it. So I'm either going to have to, one, increase the frequency of these videos, which is probably not a good idea, or two, I may have to bring back the live streams where you guys can ask me questions and we can have a back and forth, so that way it's a lot more educational, right? And I can talk about many smaller things at the same time. On that note, by the way, guys, a little bit of housekeeping. We have made a update to the Mango bull market checklist available to the seedlings. So if you guys go on over to all the channels that you guys have access to, go ahead and click on this channel right over here. There's now a new tab within that Google Sheet that has a checklist of levels, key levels that we're looking for Bitcoin to reclaim on the way to the upside. As we progress through this bull market, there are going to be some key levels that are going to increase our bull confidence, right? So now there are two tabs, one with a indicator checklist and two with a levels checklist, right? As we start taking off more of those levels and indicators, that's how we can go further out in the risk curve by either increasing our position sizes or taking more and more altcoin trades. And my oh my, those altcoin trades have been so juicy as well recently. This is, again, just way too much to talk about, but let's go ahead and get started with Bitcoin's daily candle close, right? Yesterday, we had a amazing Sunday, and all the signs were there. All the signs were there leading into the weekend. In fact, on Friday's video, I had detailed the volatility profile for you guys, right? And in that video, we said that, hey, Bitcoin is now finally beginning to show us the volatility profile that we want to see to get that increased confidence for the next leg up. Again, guys, if you guys haven't been watching and following the videos and taking notes, I really urge you guys do, because I've literally been giving you guys the cheat codes to my trend trading strategies over the past week or so. So let's go ahead and review what we had as a volatility profile for yesterday, right? By the way, this is a volatility profile for Sunday. And the reason I'm showing this to you guys is so that you can take this and replicate it for your altcoins, okay? It's the same thing. It doesn't matter whether it's for Bitcoin or for Ethereum or for Cardano. You guys can use this theory for all your coins. Let's start with the 4 hour right over here. Okay, this row over here is the 4 hour trend and volatility. If you guys do remember, a few days ago, the trend switched from long to neutral, right? And I was celebrating that. I was like, guys, this is exactly what I want to see over here, right? Because the trend on the 4 hour had been long for like a long time. We had a massive uptrend on the 4 hour time frame where it just kept going and going and going. But what ended up happening was that the volatility on the 12 hour and the daily got increasingly high. The 12-hour volatility was sitting in the 90s. The daily volatility was sitting in the 90s. And I just did not like that. I did not like that, considering that we had weekly resistance right overhead. So what we wanted was for the lower time frames to go into consolidation. Because remember, your higher time frames consist of your impulsive move. Your lower time frames consist of your consolidations that are forming your bull flag. But if your lower time frames also have high volatility, that's essentially your constant impulsive move on the higher time frames, and that's not easy to trade, especially if you want to build a bigger position size. And by the way, that's not even good for your altcoin trades, right? Because when Bitcoin is having high volatility, altcoins tend to kind of sit back. Most recently, while Bitcoin was going into its consolidation, volatility coming down, altcoins have been juicy, right? So that's exactly what we want to see. The long flip into neutral, right? Because that gives Bitcoin time to actually go into consolidation mode, giving us the volatility that we want on the 12-hour time frame. Again, as specified, guys, it's the 12-hour that I was most concerned about, right? But hey, look at what happened over the weekend. The 4-hour flipped back to long just 2 days ago, right? And the volatility compressed back down to the blue digits, 38. I love that. What I loved even more, that was that the 12-hour vol was sitting at 6. I was like, wow, this is beginning to look really good now. Because remember, on Friday, we are like, this is now beginning to start showing us the signs of what we really want to see if that weekly resistance is to clear overhead. And then on Sunday, it was like, whoof, this has become really good. And do you guys remember what I said about what I want to see on the daily volatility? We weren't expecting this to come down all the way down to sub 50. We said, hey, even if it's in the high 50s, high 60s, I'd be happy with it, right? And that's exactly what it did. It came into the mid 60s, right? And also, this bearish divergence that you guys are seeing right over here on the daily time frame, it's now gone, right? You don't see it anymore. Why don't you see it anymore? It's because Bitcoin made a new high. As soon as you make a new high, by the way, you cannot have bearish divergence, right? That's a little cheat code for you guys. If you guys are still learning your oscillators and your divergences, just keep that at the back of your mind. Okay, so that's your volatility profile on the dashboard. Again, guys, I just want to quickly remind you that this is the volatility profile from Sunday. Okay, from Sunday. Now the 4-hour has a wall of 86. The 12-hour has a wall of 50. It's still good. It's still good. And the daily wall has not changed all that much, right? Suggesting potential continuation over here, because the 12-hour, while it has increased, it's not increased all that much. The 4-hour is a little bit of concern, and we may see a little bit of a pullback before the 12-hour picks it up and sees continuation. But the big thing that we cannot ignore over here, guys, is that the weekly has now flipped long. Think about everything that's happening at the moment, guys. Okay, we have a monthly close coming up. We have the FOMC meeting coming up, and Bitcoin has just cleared a key weekly level, and now the weekly trend on the dashboard is also flipping long 5 hours ago. Keep in mind that this weekly trend has stayed short for a good 300 days. And had we just simply listened to the weekly trend, we would have avoided the entirety of the bear market. Now, I'm not about to ignore this long signal over here and miss out on a bull market. Is this going to stay long for another 300 days? I don't know. But as long as it's long, I am not going to stay on the wrong side of it. If it switches, I will change my mind, right? That's what technical analysis is, risk management. And that's what these indicators over here are here for us. It's to help us make objective decisions and not emotional decisions. Guys, let me tell you something. Let me tell you, the more I learn about macro, the more I learn about fundamentals, the more I get convinced that technical analysis is the way forward. Technical analysis is the way to make money and to keep your money. I'm not saying FA is not important. It is important. It is really important. But making short to midterm decisions based on it is disastrous. It is disastrous. You know why? Because FA is priced months and years in advance, right? So if you want to make a 5-year decision based on fundamental analysis, by all means do it. But do not make mid and short-term decisions based on FA alone. You will get wrecked. Using it as a backdrop to understand the narrative that the market is pricing in at the moment is definitely important. However, to use it to make trading decisions is a one-stop shop to failure. Remember, we just closed a weekly time frame, and we've been talking about this weekly resistance over here at $22,800 coming in from September. Okay, this key point over here that far too many people were ignoring was resistance, and you could see the market struggling over there, right? On the lower time frames, we were putting in a bull flag consolidation, which is what we were getting excited for, because we saw constant higher lows coming in by the bulls, and the bears were really struggling to push price down. We even take out those liquidity spots right over here underneath at around 22,300, and on the dashboard we were seeing the volatility profile that we wanted as well, right? So everything was being put together leading into this weekly close to get us that close above this major weekly resistance. And now, guys, this is leading to something very important on the monthly time frame as well. Alrighty, and now here we are on the charts. We're looking at Bitcoin on the weekly time frame. I was just discussing how we just closed a massive weekly candle above this key level over here coming in from the week of September 2022. Right? Well, I also want to put in context what we've done so far in regards to our cascading pattern play right over here. You guys can see that Bitcoin has pretty much reached our target, right? For those of you who are just joining us, we were looking at this falling channel over here, right? The bigger pattern, which broke towards the downside, leading towards a ascending triangle underneath the falling channel. This is one of my favorite pattern plays because it's essentially a break towards the downside while everyone's expecting a break towards the upside, right? And instead of seeing continuation towards the downside, all the naive traders simply end up being liquidity for accumulation, and then we break back into the wedge and have our big move towards the upside, right? So we were talking about this all the way back when Bitcoin was around $16,000, right? Weeks now, months in fact. And now we've pretty much hit our target. Our target of this measured move was essentially around 24,200, just like a couple of percent away. For all intents and purposes, in my mind, this target move has already met. We're also very close to the weekly 200 moving average, which is overhead, right? Which is right over there, around $24,000. Remember, this move is a good 40% move, right? 45% move. Cribbing and crying over a couple of percent is like, it's time to be taking profits. If you intended on taking profits around the $24,000 level, guys, this is where you take profits. You don't allow this to pull back on you just to get that last couple of percent after you've gained a good 40 to 50% move, right? So don't do that. It's called dynamic risk. Your risk dynamically changes as you start approaching your target, right? And so our initial target was around $24,000, and our next target, provided we see everything we want to see, is coming in at around $40,000 to $50,000. Now that actually takes us to the monthly. Alrighty, and here we are looking at Bitcoin on the monthly time frame, and you guys can see that on the bottom panel right over here, I have our stochastics opened up. And this is one of the more amazing and simple indicators on Bitcoin, right? Each time the monthly stochastics have hit the bottom zone and crossed bullish, right? And when I say cross bullish, I'm referring to the blue line crossing over the red line, right? That's our bull cross, right? And you want to see it bottomed over here, which essentially has called every one of Bitcoin's macro bull markets, okay? You can see the cross over here lined up with somewhere around this zone in around 2011, late 2011, 2012, right? And then again over here, it lined up with this area over here. And then over here in 2019, it lined up with the 3K area right over here. So each one of these crosses, guys, has led to a macro bull run. Now, I want to clarify that I differentiate between a macro bull run and a parabolic bull run. A macro bull run could by all means have a pullback, right? A deep pullback too. A parabolic bull run goes in one straight line month after month. Now, if you guys have been following Mango for a while, you guys know that I do not think that there's enough evidence at the moment to call a parabolic bull run. But things have been being put in place over the past 6 to 8 weeks now to start saying that, hey, we may be upon a macro bull run. And now we're about to get one of those signals, one more of those signals trigger right over here with the monthly stochastics now crossing bullish, provided Bitcoin doesn't see a massive sell-off leading into this monthly close coming in 1 day and 16 hours. I also want to highlight that the fact that this monthly close will not just be confirming the stochastics crossing bullish, but it will also be giving Bitcoin a close above the 10 SMA, the monthly 10 SMA, which, by the way, guys, the close underneath the monthly 10 SMA was what turned Mango bearish, right? If you guys remember, back over here, December 2021, I'd said all I want for Christmas is for Bitcoin to close the monthly above the 10 SMA. That's all I want Santa to give me, because that's what kept us bullish over here, right? In this summer bearish move that we had on the monthly, I said that as long as we close above the 10 SMA, I'm going to stay bullish, and we did that. But in December 2021, we closed underneath, and then look at that, every monthly candle closed underneath it, and we started the bear run right after that. Now, it may not look like it when you're zoomed out, but if you zoom in, you're going to see that the monthly, actually, you know, here's another trick for you guys. Look towards your right-hand panel, okay? Click on the fourth icon on your trading view, your data window, okay? And if you have your 10 SMA on, you can go ahead and pinpoint your MA, which actually gives you the exact number that your 10 SMA is sitting at. And currently the 10 SMA is sitting at 22,991. So as long as Bitcoin closes above 22,991, which is around $600 to $700 away from us at the moment, as long as Bitcoin holds it, we are going to not only get the monthly stochastics crossing bullish, but we're also going to get a claim of the monthly 10 SMA. which is going to add more confidence to our bullishness for at least a leg up to that $42,000 to $50,000. Now remember, as per our weekly Ichimoku, we cannot get excited for a parabolic bull run yet, but we can get excited for a macro bull run. Alrighty, and speaking of macro, let's actually talk about some real macro now. FOMC meeting coming up in 2 days. And this alone, guys, should give you pause on the near term in regards to putting on too much risk, right? Because honestly, when I look at this, I don't really see anything positive coming out of that meeting in regards to the markets, okay? I don't see a high probability of a positive reaction from the markets. And let me explain that, because I'm not trying to say that I am expecting bad news coming out from the FOMC. What I'm really saying is that there's good news already priced in. Okay, because if you look at the Fed Watch tool over here, what we are seeing is that the market at the moment is pricing in pretty much a 98.9% probability of a 25 basis points hike. In fact, the market is actually pricing in a small probability that the Fed doesn't raise at all, right? So the market is expecting pretty much a soft Fed coming into the FOMC meeting. If for whatever reason, Jay Powell actually comes out and says, you know what, 50 basis points, because, he may actually do this just to prove a point. He may actually do this as a one and done, and this may actually be the last increase for this rate hiking cycle. He may do this just to tighten up financial conditions again. Because remember, guys, equities going up is financial conditions loosening, because people start feeling rich again and they go out and spend, and what ends up happening is, well, when people spend, inflation goes up. The bond market going up is also a loosening on financial conditions, because when bonds go up, yields come down. When yields come down, mortgage rates come down. When mortgage rates come down, what do? They go out and buy more homes, which again is a further pressure on upwards inflation. So the Fed is not ready for the markets to be too bullish yet. And over here, we are seeing that the market is already pricing in a 25 basis points hike at a 98.9% probability rate, which is huge. And they're also putting in a small probability on no rate hike whatsoever. What if he does this just to prove a point, right? I'm a bit concerned about that, because now all of this needs to get priced out. And if we get a deep pullback, right, I'm going to bid that. If we get a 50 basis points hike and we get a small pullback, I'm likely going to stay away from Bitcoin, at least for the short term, and I'm going to watch, right? So this is a bit concerning for me. And for the near term, I would not be putting on too much risk at all, guys, not leading into this meeting. Now, that's not to say that I am mid to long term bearish on Bitcoin, right? I still think that we could get a really good monthly close, right? I still think that we could get a really good monthly close, and we get that stochastic crossing bullish. And then if we see some shenanigans with the FOMC meeting and the market overreacting, that could cause Bitcoin to pull back, giving us a bid onto some key levels, right? That I would love to start adding more risk onto my positions. For example, if we pull down to something like the 4-day dynamic, right, I would consider that a gift, and I would be looking to bid that. Of course, the markets are dynamic, and we're going to be constantly monitoring key levels that are going to be opportunities. So if we do get a deep pullback because of a 50 basis points hike, I think the markets are going to overreact. And I also think that more calmer minds are going to say that, you know what, this 50 basis points hike is likely going to be the last rate hike for the cycle before the Fed just pauses and starts watching the market do its thing. Alright, so that's pretty much it. I hope you guys enjoyed this video. Please let me know in the comment section if you guys did. Honestly, your comments have been motivating me to keep these videos coming in at a regular interval. So keep them coming. Much love to all of you. I will see you guys in the next one. Until then, do it the mango way, do it the easy way, do it the stress-free way. And remember, there's volatility coming up. Monthly close, FOMC close. Be careful. Be mango.